Hello, welcome to my Accounting 221 extra credit video. My name is Angel Mojica, and when I was thinking about things to do for this video, I thought about what I struggled with in accounting, and for me, adjustments, and particularly the allowance account, have always kind of tripped me up. So I figured why not make a video on it so that I can look back on it when I'm studying for the final. So why not? So I did a test run of the video and it was 10 minutes long, so I'm trying to condense it. So I'm looking at the chapter 7 quiz and I set up all the T accounts before we have to find percentage of net credit sales. So this is what we have so far. So that's our beginning balance in AR. That's revenue on account. That's our beginning cash balance. That's revenue that we've earned. And then that is the credit to the 150,000, that's them cashing out 150. And then the 3,200, that's a write-off that they had. And then on this side, of course, the revenue of 400,000. So that's what we're starting out with before we actually find the percentage of net credit sales and make the adjustment. Okay, so let's do that. So the 1% of net credit sales are expected to be uncollectible. Prepare the adjusting entry. So net credit sales were 200,000. So let's do 200,000. Multiply that by the 1%, so 0.01, and you get 2,000. So where does that 2,000 go? It goes into the allowance account on the credit side because it's a contra asset, so its normal balance is a credit. So add that 2,000. That's what we're working with so far, right there. That's where the 2,000 was just added. So we can close that out, and it comes out to 1,800 credit. If we wanted to, I guess we could also close out the accounts receivable, and that would come out to 146,800. And then cash is 350,000. Okay. So we also have the expense account that goes along with that that percentage of net credit sales that we found. So the UAE, and where I always get tripped up is right there. So which number goes into that expense account, the 2,000 or the 1,800? It's actually the 2,000. So whatever percent that we found for those net credit sales, that is what goes into the UAE, that expense account. So we're gonna debit that into that account. And it makes sense because every year when you find that percentage, you're gonna be adding that, and it's all cumulative. So that'll keep getting added to that. But you don't add, the total sum over and over and over again. It's gonna be year to year, if that makes sense. Okay, 3:45, we got like 1 minute left. All right, so you're at the 2,000, at 400,000, and so you're gonna close out both accounts into retained earnings. And so your retained earnings account is gonna be 398,000. So boom, made the adjustment. Remember that whatever you find for the percent of net credit sales, that is what's going into your expense account. And then once you have revenue in that expense account for like a simple problem like this, then you just close them out into retained earnings and then you're done.